Good day, Money Masters and Treasure Hunters. Welcome to the November 25th magnificent Monday edition of today's Closing Bell on the Tom O'Brien Show. I'm your guest host, filling in for Tom today, and Steve Rhodes is my name. If you're not familiar with me, I kick things off at TFNN each day from 9 to 11 o'clock. I use I've got quite a few tools in my toolbox. I use the A to B equals CD patterns. We'll look at some of those today. I use Fibonacci, expansion, and retracements, Gartley, butterfly, Gartley, cell patterns out there. I've got my own momentum indicators that I've built. I use Japanese candlestick charting to help identify what the markets are communicating to us. I've got a newsletter service called Mastering Probability. It's out each day by 8 a.m. All the details on the homepage of TFNN.com. This show is all about you, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is truly what it's all about. So let's go look at one of our tools. This is the tool I discussed this morning. This is the tool I call Thanksgiving should really be Thanks Living. You know, Thanksgiving is a time for gratitude, and it focuses on things to give thanks for. I've learned that a grateful mind attracts itself to great things. And our attitude of gratitude, well, that opens the door to abundance in our life. Now, Thanksgiving should be lived daily, and it can create more good in our life, and is the reason I say Thanksgiving should really be Thanks Living. Look, let's make Thanks Living our way of life, no matter what circumstances and challenges that each of us may face. In fact, we should give thanks for the problems in our lives, because without problems, we would have nothing to overcome, and therefore no reason to become stronger, wiser, or even more compassionate. You know, as young students, we learned about mathematics by solving a problem. And problems are nothing more than unanswered questions. An ancient proverb, folks, it says this: a donkey may carry a heavy load of gold on its back and never know its preciousness, only its weight. So maybe the weight that you're carrying, the load on your shoulders, the problems that you will overcome, really nothing more than a precious treasure, a gift that we should be thankful for. Thanksgiving is really about thanks living, folks, and it's something we can do each and every day. So I say, happy Thanksgiving Day to each of you out there. Let's go check out these markets. Our call number is 877-927-6648. Give me a call, folks. I would be glad to be of service to you. We had the Dow finish up. This talk about Las Vegas. This must be the slot machine. It finished up $7.77, trading out at 16,072.54. S&P was down 2 points. It closed out at 1802.48. NASDAQ was up $2.92, closing out at 39.94. Russell 2000 flat, off 19 pennies, closing out at 1124.72. NDX 100 up 5 points, closing at 34.27. New York Stock Exchange down 30 points. That was the leader in the clubhouse on the way down. Not that big of a deal out there. The bulls did really lose control from a price oscillator standpoint today, but I think volume was light. So we've got a little tug of war, no definitive action as to bullish or bearish control. Well, I take that back. I still say the bulls have control of the New York Stock Exchange. Gold, we're going to take a look at gold and silver. You had gold finish up $4, trading out at $12.48 right now. Silver is up 14 cents, trading out at $20 even, Steven. Light sweet crude off 68 cents, trading out at 94.16. Let's begin, before we go take a look at gold and silver, let's take a look at where are we in the marketplace. It is November 25th out there, so we are close to closing out the month, but we're going to go all the way back in time. If you're watching us on Tiger TV, thanks so much for doing that. We're going to take a look at the Dow. This is a monthly chart on the Dow. I'm going back to 1929. Going back to March 30th, 1929. Now, what you'll notice out here, you see the market of bulls and bears. They have no choice but to create signs for us each and every day. They do that via Japanese candlestick charting. Now, some candlesticks are reversals. Some are just interesting to look at. Some have absolutely no meaning whatsoever. You want to be able to understand the ones that really have meaning. In the case back in 1929, look, before any kind of market correction, market crash, whatever it is, the hands have to be played above board. We get to see what the cards are. Now, In the case of the Dow, going back to September 1929, it gave us a bearish engulfing as well as a key reversal session. Now, you may ask, Steve, what's a key reversal session? It's a great question. It's where you have three conditions that are met. Number one, you have a market that is extended. Well, trust me, back in September of 1929, the market was extended. Now, extended can be you can use different tools for that. You can use A to B equals CD patterns. You can use the relative strength indicator, use a 14-period RSI out there. Folks, you can do that. So that's one way. So it has to be extended. Number two, the market needs to close in the opposite direction that it came from. Although it doesn't clearly show it on my chart, trust me, it was coming from a lower price as it moved up into the highs in September of 1929. And number three, the intra-period, we're looking at a monthly chart, has to exceed either the high or low of the session. Well, we saw all of those above here as the market made a high back in 1929. Now, move forward. Yeah, we had the following month. You had, the so-called stock market crash out there. Market continued to move lower all the way into the 1932 time frame. And voila, back in July of 1932, you saw a bullish engulfing key reversal session out there. You saw the bulls come in. They give signals. They have to give signals. We take a look at highs out here back in March of 1937. You ended up having a key reversal session up at the highs out there. Markets went ahead and moved lower. If I just keep moving, again, it's a monthly chart that we're taking a look at. You had a nice bullish engulfing candle back in 1942 down at the lows out here. There's always markers that give us, and this is important, because 70%, well, really probably close to 100% of you are managing some type of long-term capital out there, as opposed to trading from an intraday standpoint, as opposed to swing trading out there. That covers maybe about 30% of our listening audience. So in making decisions about, hey, what's the market doing, remember to always get your time frame correct out here. So market is always giving us signals. I'm just simply fast-forwarding through our chart out here. We have a consolidation pattern that I'm showing you that took place in the time period here between May of 1962 all the way to this consolidation was like about a 500-point consolidation. Went from May of 62 to November 1980. May of 62 to November 1982 out there. A 20-year little consolidation from the lows of about 570 all the way up to the highs here at about 930. Each time at the highs, we saw key reversal sessions out there. Very important, folks. Now, let's fast forward here to the time periods of 2000. So we come forward here to the year 2000, where we saw a significant market correction inside the Dow. It gave us this little price relative strength divergence out here. We saw price move higher. We saw the RSI not confirm that. In fact, by moving lower, we then had a key reversal session. This was in January of 2000. That really marked the high out there. We saw the same thing, the same pattern, in essence, take place here back in 2007. We saw price move higher and a bearish engulfing candle that took place in November of 2007. We had that price relative strength divergence out there. There are always times that are going to give us indications as when the market is going to correct. So now we fast forward to where we're at today. We had a key reversal month out here. That took place in August. So just recently, a few months ago. And guess what? That key reversal session failed. And now we're above the 16,000 level. The Dow has really been traveling in a nice little 1,000-point consolidation range here for the period of the last several months out there. That really says that the Dow right now wants to move up into about the 17,000-ish range out there, 16.7, something like that. We don't have any type of reversal signal in the Dow on a long-term basis, period, end of story. We also do not have any of this price relative strength divergence, or at least not yet. We've got several days left in the trading session. Anything can happen. But what I want to do is I want to tell you what the charts are communicating to us. This is not Steve Rhodes' opinion. This is just simply what the charts are communicating to us, and that'll help us to understand today's activity. If we take a look at today's activity, let's go see what happened with Goldilocks and silver out here. If we take a look at gold, very important session out here, because what we had was we had a key reversal session inside gold. Now maybe you can understand why I'm spending some time on this. I'm not saying that a bottom is in, and this was a daily chart versus a monthly chart like we were just looking at inside the Dow. Nonetheless, the market was most certainly extended, and it is in an oversold condition out here. And we had a key reversal / bullish engulfing session, and we had a test of the swing point here from June. I'm looking at silver right now. Same thing in silver. So we're looking at silver. We had a test of the June 28 swing point on light volume. We had a rejection of price. We had a rejection on volume, and we had a key reversal session out here. Tomorrow's session inside silver will communicate a whole lot to us. If we see it close higher, we may have seen a short-term bottom in silver. We'll take a look at Goldilocks when we get right back. 877-927-6648.